Thank you, Kevin. We have the pleasure here of sort of trying to figure out the Asian lease financing structures and how they play a part in the shipping role today. And since we're in Athens, particularly with the Greek community. So I'd sort of like on a general starting point on a question maybe each of you could answer is, how do you think, today, the Chinese leasing model, how does it fit into the Greek markets? We've seen it take a big chunk of all financings going through. And what alternatives are there to Chinese leasing providers today? So, Spiros, maybe you can start.
Hello. Obviously, all of us know that shipping is a capital-intensive industry. So, capital plays a big part in shipping. Chinese leasing has been, a big player in shipping finance, especially given the fact that there was, during the, let's say, 10 years ago, there was a big retrenchment of the banks, the big players, the European banks, and this gap was very much filled by Chinese leasing. To get some context, let's say that the market now is around ballpark $100 billion. Probably 7-8 years ago, it was like 60. So, this is a recognizable player in the industry. Obviously, it has its merits. It has served very well shipping companies that wanted high leverage when there was not available. They have provided long profiles, so this was always very attractive for the break-evens of shipping companies. And they were always able to provide big tickets, big financing tickets. At the moment, not only capital was not available, but also big tickets were very difficult to put together unless it was a syndication led by, let's say, house bank. So, their presence has been cornerstone. Yeah.
Thank you. And I think sort of for Channing, maybe you could sort of say a few words about how you interact with the financing alternatives out of Asia, and are you seeing a increased appetite, decreased appetite? I mean, we've had some uncertainties in the geopolitical scene today and this year.
Thank you, Anders, and also thank you, Kevin, for the very money having me here. Actually, now I worked for Ebridge, a different company, but before that I worked many years for different Chinese leasing company. I experienced the very good timing. I mean, so for the Chinese leasing company to come to the international market and made a lot of good deals, successful deals with European international clients. Exactly. So just like Spiros mentioned, in the past, some of the major advantage for the Chinese leasing companies is big ticket size. Looks like they don't have any ceiling. So very efficient and a flexible structure. But such kind of advantage, I mean, the attractiveness is still there. Before our panel, a lot of panelists, they mentioned that, discussed about the concerns because of the geopolitical reasons, policies. But I mean, the commercial advantage of the Chinese leasing is still there. Maybe the difference is, okay, today the ship owners, the big names, they don't want high leverage. They have the good profit past couple of years. But I still believe that I think the Chinese leasing company, okay, now they are facing a difficult time because of the policy, the confused policy environment. But I hope this would be a short-term, detour will be solved. So the advantage, they are still keep, their advantage there. Yeah, for commercially.
Yeah.
Yes.
Thank you for that, Christoforos. I think you're probably one of the lawyers who've worked most towards the Asian markets, and you're based in the middle of it. I think with the instability and maybe some retraction happening now. Do you see an enhanced flexibility in the Chinese in the way they're thinking and how they want to structure things and how they want to try and overcome what's really happening at this moment?
Yeah, I mean, so I do recall 10 years ago. So we were here. We were talking about Chinese leasing. I can tell you that since then the product has evolved substantially. Of course, nobody expected what would happen back in February. The only way was up until now, and it's not the first time that there have been difficulties. Now, of course, we're talking about geopolitical difficulties. In the past, we had COVID. The strong competition from the banks as well has played a role in the past, but they would always adapt.
Yeah.
They would differentiate the terms. They would differentiate the product in general. They are not as heavily regulated as the banks of the world, so that gives them the ability to do stuff. Having said that, they are regulated. It's not that it's very. I think everybody would expect that the obvious option, for example, would be for the main leasing companies to convert the product into a debt financing.
Yeah.
That's not very easily done, but it doesn't mean that they don't have the flexibility to do stuff. They also have the flexibility of offering very good terms.
Yeah.
And I know a lot of people in this shipping community in Greece have ordered ships on the premise that they would be financed through Chinese leasing. So I can assure you that both sides are trying to find ways to do business. And one last thing that I would like to say,
Yeah.
just to adding to what Spiros said. Back in April, I thought that this was the end. I've had a discussion with a number of people. It was Holy Friday. Maybe it was a bit of the fasting, and I thought that the world would collapse. But since then, the number of deals that we have done, including ship owners, has been quite substantial, let's say.
Thank you for that. I think also what we've seen is, it's typical for shipping, isn't it? It's when we have in the low cycle of the market, margins go up, and when we're on the upturn of the cycle, margins go down. And I think we're seeing, and we've seen the last 2 years that there's been pressure on sort of commercial terms and pricing. What we see is, I don't know the exact figure, but Chinese leasing probably stands for 20 to 30% of the world financing at the moment. And one of the worries, of course, there is, should they be excluded from it and pulled back, which I don't think will happen. Is there depth in the market to cover that shortfall?
Actually, I can see this year. Okay, we don't have the numbers, but I think since back to 2 years or 3 years ago, so when the Chinese leasing, did the most business, maybe the portion on the market annually, more than 20%, I think, was financed by the new financing activities was led by the Chinese leasing companies. Yeah, this is, I think the number was accounted by some third parties and also some association in China. Yeah, the finance leasing associations. Yeah.
Okay. I'm sort of, I think we covered more of this USDR earlier today, so I'm not going to get more deep into that. What I'm a little bit curious about is, Christoforos, you're obviously seeing more and more transactions being done, and it seems to be sort of stable state with the Chinese leasing companies. We're also seeing the Japanese lessors coming more and more heavily, and that's a tax-driven structure. Do we expect a massive upset for 2026? Because there's a huge new building order coming along, and do we see a lot of volatility? Any one of you?
Look, I think we are in a period where probably in the history of shipping finance, we have the most available capital sources. Whether it's traditional European, whether it's an increased activity from the Greek banks for the Greek ship owners, whether it's capital markets in the US, bonds, equity, and of course, the advent of Asian financing, Chinese leasing, but also increasingly we see a lot of activity from Japan, JOLCOs,
Yeah.
which are, a perfect fit for somebody who's willing to get 100% leverage.
Yeah.
We've seen these deals.
Yeah.
Obviously with limitations. You're locked in. You don't have flexible security structures. We've seen big tickets with ECA coverage provided by European banks, Korean financing, sale and leasebacks from Japan. So I think, this is perfect music for the ship owners. Obviously, depending on the size, the structure, how each shipping company is structured, the asset, you have to tailor, the facility that it best suits you, best fits you.
Yeah.
If a ship owner, for example, wants to get pre-delivery financing, perhaps still Chinese is the best solution.
Yeah, I think without a doubt the Chinese is the best solution for pre-delivery financing because no one else wants to do it.
There's some exception, but generally the Chinese product is best fitted for pre-delivery. We're also in a period where shipping companies have a lot of liquidity. So, if leverage is not, the key driver of the choice of the selection of, the capital source, traditional banking fits the purpose.
Yeah.
Whether it's from Europe, from Asia, we've seen a lot of activity also, and we've been, involved a lot in financing from Taiwan.
Yeah.
So it depends on the strategy of each ship owner.
Yeah.
Leverage,
Do you want to add? Sure. Yeah. No, there will certainly be some kind of rebalancing.
Yeah.
Okay. We're not expecting that the proportion, the spread is going to be the same. But having said that, there are assets that fit particular purposes. Maybe ship owners who have different types of assets might opt for Chinese leasing for the assets that won't trade in the US. And there are ways how to position yourself, I think. Taiwanese banks are quite strong these days. The Greek banks are very strong, of course, and that's very, very good. So I think that it will definitely be rebalancing, but we shouldn't be writing off leasing because the terms are more competitive than ever.
Yeah.
And I think actually 2026 might seem too far away. Who knew last week what would happen over the weekend, right? So.
Okay, I want to add something just for reminding. So now, since the first quarter of this year, after the USTR, released the policy, a lot of people is discussing, the market is discussing, what will the Chinese leasing company, what will they do, for recession from the market? A lot of clients, post or draw back the new business. But actually, maybe if you look at the market, I don't want to see the recession of the Chinese exposure, the portfolio, but at least the competition. China, the Chinese leasing company, they stopped so aggressive development since actually 2-3 years ago.
Yeah.
I think since the second year or at least the third year after from COVID, beginning of COVID. That's because more of the competitors, like you just mentioned, the Japanese leasing, bank from Taiwan, or even the European, the Western banks, the traditional bank loan providers, they come back, they become active again.
Yeah.
So that's squeezed not squeezed, okay, take a lot of the deals from the market. So since then, I think the development of the Chinese leasing business is slowed down. So just this year, after the USTR policy, people pay more attention about the movement of Chinese leasing. It's not from just this year. I think this is a rebalance because of more finance supplier on the market. Yeah.
Yeah.
One last thing.
Go for it.
There's a big perception problem at the moment. I think it's also driven by the end users. I don't think that this will last because you cannot exclude China from shipping. If you want to do shipping, you have to include China. So once things slow down, I think I think that things are going to be better.
And I think to echo what you said, if we put some numbers into context again, like a third of the fleet is currently built in China, but the new building, the order book is 2/3 in China. So this shows also the ship owners, focus on the Chinese market.
Yeah. I think also when you're saying that, I mean, having these, just very quickly into the trade tariffs that are going on, I mean, I think it's a general belief that it will have an inflationary impact, and it will be the consumers that will sort of pick up that end cost. But I think, my last question you already answered, which is basically, what you're seeing in conclusion is that, this is a small blip in the history of ship financing, and there will be a realignment. And I think all people who have seen commercial sensible transactions to be done realign and restructure and regroup to make sure that they can lend out. And I think last year I had a few meetings in Europe and also in Athens, and the ship owners at the time who were enjoying great markets, most of them were saying, we have one big problem, Anders. And I, naive as I am, go, what's the problem? Is there anything I can help you with? And they said, we have a cash problem. And I was like, okay, well, I could try and help. No. We have too much cash. So I think, in many ways, you're seeing also repayment. You're seeing increased liquidity to banks, to leasing houses, and they need to lend it out. And so, I think they will be innovative and find new ways of lending their money out. Yeah.
Let's not forget that leasing is financing. It's not ownership.
No.
So there are ways to do financing where you can have a structured leasing product where the lessor doesn't need to be the registered owner. I mean, we've seen this in other areas as well.
Yeah.
So I don't think, from what I know and from what we know, when you read the notes, the USTR notes, it doesn't appear that financing, was the target. And also, we shouldn't forget that Chinese lessors are not policy banks. They are not there to back exclusively assets being constructed in China. They've funded Korean-built ships. They funded Japanese-built ships. In an ideal world, they could have funded ships built in the US. So they are not a policy-driven vehicle.
No.
They are there to finance ships. So,
and I think, there've been many instances, I haven't heard actually recently, but, in the recent past, that European banks were also providing the back leverage in Chinese leases. So it meant that there was, an interconnection between the capital providers.
We had one when the Chinese now came with their retaliatory measures yesterday or the day before yesterday. One of the thoughts was, okay, so you're an American ship owner or a US listed ship owner with 25% ownership being US nationals. Your vessel has been financed by through a Chinese leasing house, so ownership is China. And then you get tariffs in both ends, so both China and the US. I think people need to start realigning a little bit, but yeah. Anyway, I think, we'll take some questions from the audience, if there is any.
Any questions, please? Yeah.
Hello. Just a question. I've heard recently that there is an attempt or they're looking in China to convert the leases into banking loans, and that this is apparently a defensive possibility in the event that these sanctions continue to exist. Could you give your comment as to whether or not this is practical and likely to take place?
It was very timely because I think Christoforos here sent out an email earlier today.
but that's not linked to USTR exclusively. Yeah, but no, I think so. I'll take the burden. I take the burden. I know. Okay. So some leasing companies can do that. It depends on who regulates their leasing company. Some leasing companies also cooperate with their mother banks as well. But it cannot be. It cannot substitute leasing. Sale and leasebacks could evolve into something different, and we have been involved in the process as well. But it cannot be fully converted into debt financing with a mortgage. Because what would be the difference then between a leasing company and the mother bank? There has to be a clear distinction. Also, if it was to be converted into a debt loan, the terms which would have been made available wouldn't have been the same. And plus, you potentially, I don't know, I'm not a Chinese regulator, but capital adequacy restrictions and other stuff could play a role. Leasing is, as I said, and we discussed, it's a flexible instrument. It's not as heavily regulated. It's still regulated, but not in the same manner, as I said, as the banks.
To some extent, I think you are exploring some, we can call it the hybrid structures, correct?
Maybe.
Another question? No, one from me perhaps, maybe again Christoforos, I don't know. But I mean, we've got the whole USTR thing coming in now, and I mean, okay, a vessel financed by Chinese leasing co's in the US. Is it hit by these penalties or not? And if so, who pays?
Yeah, so under Annex 1, there's a reference to a customs form, and there's a reference to the Certificate of Financial Responsibility. Through these documents, you ascertain who is the owner and who is the operator. Unfortunately, there's no clarity 100% whether we're talking about registered ownership or whether we're talking about beneficial ownership. Most structures that we've seen, beneficial owner is not the Chinese leasing company, but is the end user. Having said that, most people think that they have to include the registered owner's name into the form. So technically speaking, if you put the registered owner's name in the form, then that's absolutely, that means that you have to pay their fees. The paradox here is that in other parts of US law, a finance lease can be easily reclassified as a loan. So your title under a finance lease means nothing. So it's a bit of a paradox that a finance lease would bear fees on the one hand, but in a Chapter 11 context, you're simply an unsecured creditor. Yeah.
Sorry, and correct me if I'm wrong, but this is voluntary, right? Like when a vessel approaches a US port, they have to take the initiative and declare, make the relevant declaration and pay the fees before calling the port.
Yes, so when you say they, you mean the ship owner?
I mean the ship owner.
Yes, yes.
So it remains to be seen how this will evolve. Who is going to first draw, the...
Yes, I wouldn't
Who's gonna
want
be the
to
first one?
file a false declaration, but ultimately it is up to the ship owner to fill in this form.
Yeah.
And if it is the Chinese lease company who is the owner, is the Chinese lease company expected to pay? And if so, and are they going to do it, and how's it going to work?
It depends on what the document says. But in most cases, I mean, if the document is correctly drafted, no. Because the lessor is not taking the operating risk. Yeah. For the structures that we were talking about earlier, we need to think about, it's not just USTR. Financial lessor, being the registered owner, it means that they bear operating risk. We've seen lessors being involved in situations where they wouldn't want to be involved. I mean, I'm not saying that it has happened, but sanctions could be an issue. When you're not a registered owner and you don't appear as a registered owner, it is also in the interest of any financial lessor potentially to consider this option because you're not incurring the operational risk. And that goes back to the structure that maybe we have, maybe.
Okay, a final question? Yes? No? Then thank you all very much. Thank you.
Thank you very much, Kevin.